All right, welcome to Investment Banking Insights. This is the only show dedicated to helping you learn both the technical and the non-technical aspects of the investment banking process. Hi, my name is Alex Mason and I'm your host. And today we're talking about the concept of enterprise value. So let's go ahead and get into it. I want to show you exactly what this is. Now, there's different ways to value a company. A lot of people think of the value of a company in terms of its market value. So how much the company is worth in the stock market, for example. But there's another way of looking at company value called enterprise value. And I want to go ahead and write this out for you right now. So enterprise value of a company is equal to your equity value plus your debt plus your non-controlling interest plus preferred stock minus your cash. This is the basic formula for enterprise value. And you may even see a simpler version of it where it's equity value plus debt minus cash. That's the simpler form of it, and you should know both. But let's go ahead and talk about what this means and what it represents. So enterprise value, this is the value of the firm itself when you account for all of the capital that has been put into the business, the amount of money that both equity holders and debt holders have put into the business after making certain adjustments. So let's go ahead and walk through these components one by one. First of all, your equity value, this is how much money the company is worth in the stock market, for example, also known as market capitalization or market cap. So if a company is trading at $10 per share and it has 100 shares outstanding, then it's going to be worth $1,000 in equity value. And that's just multiplying the dollar per share by the number of shares gets you your equity value or your market capitalization. So that can be a major component of the company's value. The other thing we have to do is add in the debt. So how much debt does a company have? So maybe it has 200 million in debt, for example. And that is money that debt investors have lent the company in order to exist. And so this is part of the overall capital structure of the business. So very important to understand that. Your non-controlling interest, this is little pieces of companies that this company owns that it doesn't control. So let's say a company has a joint venture with some other business and it owns, let's say, 40% or 20% of the business. Whatever slice of equity that belongs to the parent company, that's going to be included in the enterprise value calculation as well. That's the main thing to remember there. In terms of preferred stock is interesting. It's kind of like stock, but it's kind of like debt. It's really a kind of debt instrument that helps fund the company as well. It's just different than what we consider quote unquote debt in terms of your regular plain old debt. So because it's a type of debt, we're adding it into enterprise value as well because it's part of the capital structure of the business. And then the last part is interesting. The last part is subtracting cash. Now, why would we subtract cash from a company's value in order to determine what the value is? Well, think about it from the perspective of buying a business. Let's say that you own a business and I come to purchase it. If I purchase the business, Well, guess what? You have money in your company's bank account, right? You have some kind of cash there. So whatever dollar value I send to you to purchase that business, the cash that exists in that business isn't really how much I paid for it, right? Because it's kind of like I already get that cash in the very act of purchasing the business. So the way that I think about it is it's kind of like a rebate on the purchase price of a business, because the new owner of the business, they get the cash that's there, right? They also get the obligation to pay off this debt, right? And they get the equity value. So this enterprise value formula accounts for all of these different things and tells us, based on the total capital structure of the firm, how much is the firm worth? And this is very important when it comes to understanding the transaction value of a company, and really applies later as we get to talking about mergers and acquisitions. So that's the concept of enterprise value. Okay, that's what we got for you today here on Investment Banking Insights. My name is Alex Mason. Thank you for liking, following, subscribing, all those good things. And I hope this has provided value to you. I will see you on the next one. Have a great day.